Welcome back to the channel. As always, if you copy trading, you're an absolute moron and you deserve to lose all your money. And with that out of the way, we're going to look today at a long idea called rubric, ticker RBRK, operating in the software cybersecurity space, to be more precise, industry. Market cap is just under 15 billion, although as you can see from this chart over here, this market cap has increased rapidly over the last few months. And there are certain reasons for that. Let's talk first about why I started looking at this sector in the first place. If you're familiar with certain stocks in this industry, you may have come across news that last year, CrowdStrike, which is one of the competitors, had an outage failure that led to gaps in their security which could be exploited. If we go back to that stock, you can see here on the chart that that had a very pronounced impact in the company. And even though it's recovered, the perception, in my view, has shifted from outsourced cybersecurity providers are all we need to the realization by many companies out there that whilst that is necessary to have in place, it is also important to have cyber resilience, which means that these companies simply accept that they're going to be subjected to cyber attacks. And what is important for them is not only the ability to avoid that from happening as much as possible, but also the ability to recover from that. This is what this company do. So when we look at what they do in greater detail, we can see that in the description is data protection, unstructured, cloud data protection, software service data protection, and so on. But what really makes the difference is that they are a zero trust provider. And that operates on the principle that no user or system should be automatically trusted, but instead it requires continuous authentication. So whether you have a device that's connected to a company network or not, these guys provide the ability to constantly verify that every single user connected is verified at all times. Now, in terms of the macro and what is driving this, there is a survey by 200 C-suite cyber leaders at companies with revenue of 1 billion up. And the results of that was that 40% of these companies had suffered recent cyber attacks, resulting in security breaches, with 38% experiencing 1 to 3 attacks. In contrast, only 2% of businesses implemented cyber resilience. And Rubric, again, is one of the few providers that does this. Now, of course, you can see that this is a young company, but why has it grown so much over the last 6 months? Well, it is true that during the November period, many stocks were going up because of the election. But if we compare that to the performance, and I have this chart here to compare that, we see that the performance from Rubric has outperformed more established players in the sector, such as Palo Alto, Tenable, OneStream, Fortinet, ServiceNow, and CrowdStrike over the 1 month period, but also over 3 months. And why that is because the increase in generative AI is driving two things. First, the need from their clients to have functions that protect their AI processes, but also the company is also leveraging AI to provide a service that protects them against this. So essentially, they are enhancing the offering through AI to provide a better product. Now, the company, as you can see here as well, recently had a massive uptick. And the reason for that was the latest earnings report. So we have a look at that. We can see that it was pretty positive. So sales was a beat, EBITDA was a beat, EBIT, EPS, and also on a GAAP basis. So it was a smash all around. But additionally, the company had very, very good commentary in terms of an update for the business. And they also increased guidance for the 2025 year period. Why is that? Well, first of all, the company has been able to capture more and bigger customers. So they have been very positive in terms of their commentary about how they're winning all deals that they come across. And to use the words from management, they said that the only thing that they're worried about is the only conversations they're not having because those are the only deals that they're not winning. That obviously is a very impressive organic growth, which if we can have a look here at the numbers, it's very impressive in its own right. So the company has been growing at between 20 and 40% year on year with a very good profit margin. Yes, they are still EPS negative. However, if we have a look at their income statement, we see that their R&D is very big. And if we were to add that back and assume that the company is going to slow down or perhaps stop those R&D expenditures, the EPS picture would look very, very different. And again, their expectations is that in 2026 financial year, the revenue growth is going to slow down a little bit, but still very impressive. While its gross margin is going to pick up, and EBITDA margins and other margins are going to continue improving. So I mentioned before how the company has been able to capture many new logos, but there's also a reason for this performance. Their revenue mix shift has changed recently, and that is also resulted in improved financial performance. In essence, they've transitioned from a maintenance revenue model to a subscription revenue model, making the company revenues more stable, predictable, and solid. During this earnings report as well, they also announced a very interesting partnership with Amazon Web Services. They alluded at a new platform that they're going to be launching that will accelerate the development of trusted Gen AI applications over the next 3 to 5 years. And that is going to be a tailwind for them to continue capturing that demand. So all around, the company has been performing really, really well. So we can see as well, if we go back to the charts I prepared here, we can see strong KPIs. So we have good subscription growth, good cloud growth, and good growth in terms of not only the number of customers, but also how big those customers are. You can see that the growth on subscriptions is very consistent, yet rapid. And as well, how that is compounding over time. Now, for the next earnings report, they're expecting a guidance that is far above what the market is expecting. So you can see there's only one analyst covering them, but essentially they're expecting a 90 cents per share loss, whilst the company is leaning more towards 50. So that creates volatility in terms of how far this stock could move over that time period. This will be reported in June the 4th. And another catalyst that will be taking around similar time will be the scale of infrastructure available to deliver AI. So at the moment, management has mentioned that there is a lot of urgency from the customers to adopt their product. And part of what is driving that is the adoption of applications such as Microsoft Copilot. Because of the AI that is required to make that application work, companies are coming to them in order to apply their solution into their systems. At present, however, there are huge bottlenecks in terms of infrastructure for Microsoft to deliver AI. So the delivery to the market is being gradual. At the moment, there is supply constraints for Microsoft to deliver this, to meet this demand in terms of their infrastructure. But by the end of the financial year 2025 for them, Microsoft, that's June 2025, in 3 months' time, the infrastructure is expected to grow to a large enough size to resolve these bottlenecks, enabling faster adoption and bigger scale of workflows. So in essence, we should see, assuming all those things stay true and go work as expected, not only a continued growth rate, but probably a faster growth rate for the company. So with that, this is one that I'm going to keep on the watch list. I probably want to enter a little bit down the line, considering the recent rally that it's had. Obviously, it would have been good entry point to enter here. We have missed that because of the earnings, but that's not to say that we could revisit this at a lower levels, as we saw here recently, ahead of the earnings in June. And I would expect as well that after that, if those things come to fruition, analysts get more interested in the stock, price targets are revised upwards, and then we see a continued growth in terms of the stock price, more into the 85 upwards level. My price target for this at the moment is 85. So I would probably want to enter this at slightly lower levels. Hope you enjoyed the video. See you soon.